Hi students, thanks for joining me. In this short podcast, I would like to look at the relationship between comprehensive income and accumulated comprehensive income. I think the best way to do this would be to start with an unadjusted or an adjusted trial balance, and I have one for Jamin Group. A couple of things I'll point out to you to start with. I have an available for sale investment, $5,000. A fair value adjustment to that of $500. That means I've written it up $500 since I've owned it. I have retained earnings of $400, and I have accumulated comprehensive income that I've recognized to date in prior periods of $100, and then I have an unrealized holding gain of $200, and I know that unrealized holding gain relates to my available for sale investments because that is the only kind of investment that I have. To work through the example that I want to show you and drive home the points I like to bring to bear, the first thing I would like you to do is put me on pause and calculate net income. Simple, huh? Go ahead and do it. In our first simple example, we took revenue, $1,700, subtracted expenses of $800, and came up with net income of $900. The next thing I would like you to do is to practice calculating comprehensive income. So put me on pause and calculate comprehensive income from this example. The calculation of comprehensive income begins with net income, $900, and to that we add the $200 of unrealized holding gain that cannot be included in the current period income because it's for an available for sale investment. We add that into net income, and our comprehensive income for the period is $1,100. So our net income for the period is $900, but our comprehensive income is $1,100. So let's continue our example of Jamin Corporation by examining what retained earnings looks like at the end of the period and what accumulated comprehensive income looks like. So how about you put me on hold and calculate a very simple retained earnings statement for Jamin Corporation as of December 31st. So our beginning balance and retained earnings was $400. We brought forward net income from our prior slide in the amount of $900. Subtract the current period's dividends of $200, and our ending balance in retained earnings is $1,100. Now let's calculate our ending balance in accumulated comprehensive income. Be sure and start with the balance on our adjusted trial balance of $100. Put me on pause. So we started with our beginning balance in accumulated comprehensive income of $100, and we added to that our current period's unrealized holding gain of $200. So we have an ending balance to carry forward on the balance sheet of comprehensive income of $300. You'll recall that our comprehensive income total for the year was $1,100. $900 of which we can pick up in retained earnings because it was allowed to be picked up on the income statement, and $200 of which we picked up in accumulated comprehensive income because generally accepted accounting principles doesn't allow you to pick up holding gains on available for sale adjustments. Retained earnings picked up the legitimate amount of net income, and accumulated comprehensive income picked up the amounts that were not allowed to be recognized. And in total, 900 plus 200 equaled the total amount of comprehensive income for the period. Hopefully, that helped clear up some ideas for you on how it relates, or how comprehensive income and accumulated income relate to the balance sheet, and how retained earnings and net income relate to the balance sheet. I kind of look at it as though The legitimate net income gets picked up in retained earnings, and the amount that we're not allowed to recognize gets picked up in accumulated comprehensive income. Maybe that helps you relate to it in the same way. Either way, thank you for joining me, and we'll talk to you soon. Bye for now.